Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Wednesday, April 3rd, 2013. The market this morning looks flat to maybe up a bit. Gold is still struggling at that 1600 level, and oil is down a tad. I'm going to keep this video kind of short today, hopefully. I don't get too caught up in gibberish. But anyway, yesterday being a slightly down day, some of the insurance policies moved up a tad, not much though. We're still looking pretty good on the profit tent portfolio. We're at 174, and I will tell you that I closed a couple yesterday. And a way that you can look at it, I closed BIDU. So let's go to the account statement here, and we'll bring up BIDU, and we'll say let's take a look at the last 30 days. So here's my entry into BIDU, the credits that I collected. Which came to like $1.04, and it cost me 22 cents to exit. So that was approximately my 80% on that particular trade. And then also was looking yesterday afternoon, and I saw Netflix, and I saw a similar opportunity to exit on that one, and that one was $1.17 total credit and 32 cents to exit, for approximately 80% on that one as well. And the way that I exited these, they were, I did them as separate. I bought back each side. I bought back the put side, and I bought back the call side. And I had I put limit orders on both sides just to see which one would hit first. And usually, depending on which way the stock moved after that, ended up that, well, in this, let's take a look at Netflix in this particular case. You can see that at 2:42 in the afternoon, the call side hit, which means that probably Netflix was dropping in price at that time. And we could look at a chart if you wanted to. Oh, yes, it was definitely dropping in price at that time. So the call side hit first, and then I just went in and adjusted my order on the put side to have that exit. Now usually when you put these in, it's going to propose that you put a limit order in at the midpoint. I could have added maybe, like in both of these cases, probably a penny more, and they would have executed right away. So because there was only like a 2 cent difference between the midpoint and the natural price. So it probably would have been just as good of an idea as to just bump it up that penny, and they both would have executed almost immediately, and I wouldn't have had to sit around and wait and do all this adjustment stuff. So that's just two different ways to get out. When you want to buy something, they're going to want to push you towards the natural price. When you are net selling stuff, you can get the midpoint price pretty easy. Okay, if anybody has any questions about that, I can cover that in more detail in a future video. So just leave a comment and ask for more information. All right. Also, on my spread account, I did get in on Google yesterday. I did kind of a little bit of chasing on that, and I'm embarrassed about it. And turns out that it turned out okay, but it would have been a lot better if I would have gone with my original price, which I think originally I was looking at the I I think like the 800 or something, if I remember right. 800, 795. If I would have stuck with the 805, 800 that I changed it to, I would have been a lot better off. And I would have gotten a similar credit. This is a one-to-one play. We have $522 in risk and $478 in reward. So that's approximately one-to-one risk-reward. Shorter term play. I know it's April, but Google just seems to be in a pretty strong move right now. But I ended up chasing it a little bit. Turns out that so far it's okay. Always happier to get, get something a little bit lower here in price so that I have a better chance. And if we look at a chart from yesterday, I kind of entered this thing pretty early here. It would have been better if I could have gotten that better price, but it did make a bit of a recovery. We're bouncing off of this 50, so it would have been just a little bit better if I would have maybe held off a bit longer. But be that as it may, we're in. This is the short strike here at 810, and we're taking advantage of that bounce off the 50. What else did I want to do? I want to go and take a look at the alerts here. I'll just for the sake of no confusion, take that off of there and bring that up higher. Alright, we have an alert on MasterCard. And why are we watching MasterCard? Well, let's take a look here. MasterCard is worrying me a bit here. This is our short strike up here on the call side for our Iron Condor, and just a little concern that I put this alert on yesterday, a little concern that it may be moving towards that. But based on yesterday's action and the overall market too, I'm just going to leave that alert right there and not do anything with it. I have an alert on Amazon, and let's see here. Anything going on with Amazon? I don't even think, let's look here. Yes, we do. We have an Iron Condor on Amazon. So let's go here and take a look. See if we want to keep that alert on here or not. What we were looking for was a reason for that alert, and it's still valid, is to get in on a bear call. So let's just, we'll leave that alert there. We still have our Iron Condor on. Let me make a note on that. Alright, and we have an alert on BIDU, but we exited BIDU yesterday. I believe, is there another reason why we might have this alert? Way down here. No, we're done with BIDU. So we don't really need that alert anymore, so we can cancel it. We'll get rid of these and start clean. Now next month is earnings season, or at least next month's expiration. Earnings are going to fall within that time period for a lot of the profit tent portfolios, so I'll probably shift more emphasis towards the ETF index products. So, okay, BIDU's canceled, and then we have our old alert on SPX. And that alert has to do with that previous high from many years ago. And that's not close like they talk about on TV. It's just the plain old high, 1576. I think it was 13 or something like that. So we're still watching that to see if SPX is going to obliterate that previous high. Let's take a look at particularly the profit tent portfolio. I wanted to look at the delta here on our iron condors. We're at 14. Chipotle is kind of skewing things a little bit because we just have, no, that's not Chipotle CF, we just have one end of that particular one, and it is down to less than a nickel, so I could close this for no transaction fee. So I will do that today, and it's only a penny difference there, or a penny and a half. I don't know how it's going to account for that, but there won't be any transaction fee on Thinkorswim's platform if the price of the option, especially the short, is less than a nickel. I'm not sure about the long. We'll have to see how that comes out. Don't really want to pay $2.50 on that. I'll probably just leave it alone. I think I'm just going to leave it alone. Alright, so we're at 14 delta, which is not bad at all, riding into expiration. Chipotle, a little worrisome. But that is our this is our April 5 and 10 iron condor. So I'm not worried about Chipotle right at this time, just because it's new. It was a new trade, just done recently. We can look at it over here. Let's go back, I think about 7 days. Yeah, so it's on 328. We put that one on, and we collected 61 cents on it. And at the time, like, the puts were at a 5% probability and the calls were at a 10% probability of expiring out of the money. So that is what I wanted to look at with the profit tent portfolio. So we're okay there. This is our insurance policy. In this particular portfolio, we could take a look at that one too. This is our calendar. This is the one that we rolled, and we might be looking at another roll because these are going to expire a week from this Friday. So let's keep an eye on that one. And then last but not least, wanted to bring your attention to this swim lesson here, Surviving Market Storms, Tips and Measures to Help You Hedge Against Adverse Markets. I have it up here. No, that's not it. I wanted to cover that too. It gets confusing because the screen looks the same. There it is. This is the video, and I watched it last night up to about the first 25 minutes, and there was some market chatter, but he was starting to get into the meat of the presentation, of the subject anyway, at around the 25-minute mark. So you might want to just slide your slider up to that and watch that. Also, for today, just lastly, ADP's unemployment report, which I just wonder why it's not read, although it's not the official one from the government. It's actually more private sector focused, but it could have an effect too. But otherwise, it looks pretty quiet. And I believe that is it for today. All right. That's it for today. Thanks for watching. Have a great day and happy trading.